So when one of the world's largest investment firms has a record year, you gotta pay attention. It's more than just a headline, you know? It's like a signal for where the entire economy might be headed. Okay, let's dive into the story behind Blackstone's absolutely massive success.
It all starts right here, with this number. In its fourth quarter, Blackstone reported distributable earnings of $1.75 per share. Now that's the actual cash profit, the money that can be paid out. And they didn't just meet expectations, they completely crushed them.
And just to put that in perspective, listen to what the CEO himself had to say. We're not talking about just a good quarter here. We're talking about the single best performance in the company's entire 4-decade history. That's a huge deal.
All that success has translated into some staggering scale. Their assets under management, so the total amount of money they're handling, it swelled to a new industry record of almost $1.3 trillion, and yep, that's a T for trillion. So that brings us to the big question, right? How in the world did Blackstone pull this off, especially in such a wild market? Well, we're going to break down the 3 key drivers that really powered this historic year.
First up is their massive, and let me tell you, very strategic bet on the infrastructure that actually powers the whole AI revolution.
Okay, now what's so smart about this is the strategy it shows. You see, while pretty much everyone else was chasing the gold of AI, the fancy chips and the complex code, Blackstone was busy selling the picks and shovels. We're talking about the power plants and the huge data centers that AI literally cannot run without.
And they don't see this as just some passing trend. As they put it in their earnings call, this isn't just an investment opportunity. They believe it's the fundamental engine of the entire economy right now.
So did that whole picks and shovels strategy actually pay off? Oh yeah, big time. This number just says it all. Their infrastructure fund delivered a stunning 24% return for the full year. An absolutely incredible result. All right, let's move on to the second key driver, because this is a big one. It's not just about making smart investments, it's also about where the money to make those investments is coming from. And we're talking about a huge influx of cash from a pretty new source.
For decades, firms like Blackstone were pretty much the exclusive playground of giant institutions, pension funds, endowments, that kind of thing. But just look at this chart. While those institutions are still the biggest slice, private wealth, so money from individual investors like you and me, now makes up a really significant chunk of that pie.
And that piece of the pie is growing at a mind-boggling rate. Fundraising from that private wealth channel surged by 53% year over year. I mean, that is a massive, massive shift in this landscape.
So here's the crucial point. We're literally witnessing the democratization of finance. Investments that were once completely walled off, reserved only for the ultra-elite, are now opening up to a much wider group of people. It's changing the whole game of who gets to invest in these high-growth companies.
All right, the third and final piece of this puzzle is what I like to call the return of the big deal. The markets for IPOs and big company sales are finally starting to thaw out, and that's allowing Blackstone to cash in on some of its biggest long-term bets.
Before we go any further, let's just quickly define a key term you'll hear a lot: realization. It sounds complicated, but it's not. It's just the industry word for turning a private company investment back into cold, hard cash, usually by selling it to another company or by taking it public with an IPO.
And the Medline story is just a perfect case study of how this works. Blackstone bought the company back in 2021 in a record-setting deal. Then they spent years pumping it up, accelerating its growth, and then, wham, they took it public in what became the largest sponsor-backed IPO ever.
Just how big was that deal? Well, the Medline IPO raised a massive $7.2 billion. This wasn't just a win for Blackstone. It was a huge signal to the entire market that, yeah, big-ticket IPOs are officially back on the table.
And here's why that really matters. A successful exit like this creates this powerful flywheel effect. Cash goes back to the original investors, which gives them the confidence and, of course, the capital to reinvest in Blackstone's next big project. It just keeps the whole thing going. Now, to give a really balanced picture here, it's important to point out that not everything was perfect. There was one pretty significant part of Blackstone's portfolio that really lagged behind the rest, and that was real estate. This chart makes the challenge crystal clear. I mean, look at this. On the right, you see the broader stock market, the S&P 500, which is up a staggering 75% since all those interest rate hikes began. But on the left, private real estate values have gone in the complete opposite direction,
down 16% over that same period. Ouch.
However, Blackstone isn't panicking. They're actually seeing what they call green shoots. They're pointing to things like new construction being at a 12-year low, which tightens up supply, plus a big pickup in logistics leasing and more deal activity. They think a recovery could be on the horizon.
So, as we start to wrap this up, it's pretty clear that Blackstone's record year isn't really just a story about one company's balance sheet. No, it's more like a high-level indicator, a signpost pointing to some of the most powerful forces shaping our economy right now.
So if you're going to take away 3 things from all this, let it be these. 1. The AI boom is built on real-world stuff, like power and data centers. 2. Individual investors are becoming a huge force in private markets. And 3. The comeback of big IPOs suggests that overall, confidence is returning to the market.
And believe me, Blackstone is ready for whatever comes next. They are sitting on a war chest of $200 billion in what's called dry powder. Basically, that's cash on hand, just waiting to be invested. They're not just reacting to the future. They are geared up to actively go out and shape it.
Which really leaves us with one final big question. If a firm this massive and this connected is making these kinds of moves and seeing these kinds of results, what is that signal truly telling all of us about the economy of tomorrow?